Good morning. Good morning. We'll get started in just a second. Hope everyone is well. Get time for some people to come in. It is just me today. No Henry. Good morning. Good morning, D, Florine, Victor. How's everyone doing? And make sure the audio is okay.
Good morning.
Good morning. Good morning.
Yep, able to hear you well.
Thank you. Thank you. Hope everyone has had a good weekend. Hope everyone had a good, insightful week in the markets. Yesterday was ICT's last day on YouTube. So I encourage everybody to go listen to that space that he had. Um, following Michael for 5 years now. Definitely kind of sad as time goes on. He becomes kind of like a father figure, and it is even the ones that don't require as much of him to learn or any of that. Uh, it's definitely a weird feeling. Um, I'm definitely happy for him because he has given so much to the community, and he's human and he's got a life, he's got a family, and I'm glad that he is stepping away. Uh, you know, it's I don't know how long he'll step away for.
Just about to ask that. Like, do you really think
Um,
he's gonna follow through
uh,
and stay away?
I don't know. He's had periods like this. I don't. I think he'll be back. I think Michael is
Yeah,
so passionate about what he does for who he does it for that he'll come back. It won't ever be like
yeah.
in the depth in which he was doing it before, but I think that he will definitely stop by.
Pop in every
Um,
now and then. Yeah, I agree.
but it's definitely very weird. It's a weird feeling. Even someone who I don't keep up with Michael as much as I used to. And that's a good thing. That's where he tries to get his students. But it is just a weird feeling. It's funny how someone can kind of touch you when you've never even really met them and you've never even really had to you've never had a full conversation, but put such a touch in your life and inspire you in so many ways. He was saying yesterday in his call about how he was talking to someone and how they related him to Moses, not in the sense of that he was Moses in a God figure way, but how he parted ways for so many traders. I can tell you right now, if it was not for Michael, and I've said this many times, I wouldn't be doing this. There's a reason why I still trade the way I trade 5 years down the road, and I'm not jumping from strategy to strategy. It's and he even said it. He said, there's an indescribable feeling that when and you know that you will, as long as for as long as the markets continue to trade, you have something so special and so unique that so many people will never understand. Um, it's this. He said it. It's an indescribable feeling. I don't really know how to describe it. And I'm beyond thankful, for Michael and to be able to be here. Like he said, and I've said it many times, I don't want to be passed through as a mentor figure. I think I'm just another student. I think, all you guys are just brothers and sisters to me. And it's it's not that, I know it the best or anything like that. I'm trying to figure out just as well as you guys are. Every single week I find something new about myself, about the charts, whatever the case is. It's an ever-going process, and it's something that you guys have to realize that you're not going to catch the person that you're chasing. And that's what's fun about it. And I think, if someone were to ask me what's better, the destination or the journey, I would say the company. And I think that as individual as this game is, over time you start to realize that, you know, the company surrounding you through your journey, your individual journey, we can't take the steps for you. We can't walk up the mountain for you. But at the end of the day, having company in this failure-filled industry, because it is filled with failure, even the ones that are finding success in it, uh, have failures time and time and time and time and time again, and it never truly goes away. And I think that's the beautiful thing in trading. I think that that's something that, uh, you know, it's kind of like, if it was easy, everyone could do it, and it's nowhere near easy. So, you know, I don't think he'll be back, or I don't think he'll be back for a while. I think that this time was a little bit different than most times, and I think he truly does mean it. I think he wants to focus on his kids and his wife, and obviously he's going to be trading. But I just think that it did take, 430,000 followers on Twitter, over 800,000 subs on YouTube. When you get to that level, there's just a lot of weight, and there's a lot of undertone there to keep up with, and it's hard. And I don't know what it would be like to be in that situation. And I think he's totally in the right mindset of just kind of knowing that he has plenty of students that are well off that can help each other. And he mentioned it yesterday. He said if there's one thing that we can do for him is when you do figure this stuff out and you see the person that's still down, help them stand up. And, I think that that's why me and Henry has gone to the extent of all of this stuff, is because we truly do want to help, and we don't want to be the only ones standing up. And we know that it can be done, and it should be done, and it must be done. And it takes, time and time and time. But if you continuously go through and understand that when you win, you're not as good as you think you are. And when you lose, you're not as good as you think you are. And that goes a long way. And you have to realize that trading is not about winning or losing. Yes, it's about making money, but it is truly, I truly do believe it is the most, how do I put this? It is the best way for you to figure out who you are as a person. And that has nothing to do with the charts, right? It can open up, and it tends to spotlight into every little niche of your life, who you are as a person, the traumas that you overcame, and maybe the traumas that you're still going through. But I think over time, you start to realize that you are trading you, right? You can find a model, you can find price and time and figure all that stuff out through due diligence. But over time, a lot of times we tend to shove away the things that we don't want to bring to the table, which are things that we have to figure out ourselves, right? Who we are as people, who are in our lives, right? Who are the people that we spend our day-to-day lives with, right? How do we go about our day-to-day lives? I'll go ahead and get into it now, though. So we'll start with news, like we always do. No news on Monday. Tuesday, 8:30, CPI. Hopefully you guys know the deal by now. Do not go into the market ahead of this. You get a core month-on-month, a regular month-on-month, and a yearly. Very volatile instant delivery. No reason to be in the market prior to this releasing. I'm going to just start saying, 5 minutes past, right? Because technically you can still find, I would encourage you, if you are new, to wait more than just 5 minutes, maybe 15 minutes, 30 minutes, an hour, but at least 5 minutes after 8:30 hits. Let that instant redelivery kind of do its thing, and then have it be up to your discretion to see if there's something available. And then following CPI, we always have PPI on Wednesday. So 8:30 a.m., you've got core PPI month on month, retail sales month on month, a manufacturing index, regular PPI, and retail sales. So big slate here. Both of these are great days to trade. It's just that this one can be a lot less clear with regards to what you might be trying to trade or how you trade. This one's going to be the harder of the two for sure, but I think that either of these days will offer great volatility. Later in that AM session at 10:30, you also have crude oil inventories. Thursday, you have unemployment claims coming out at 8:30, tied with the manufacturing index there. Right before equities open, you do have an industrial production month on month. And then Friday, you've got building permits. So I really obviously like Wednesday for probably the most ideal day to trade for me and what suits me. You do kind of have volatility a little bit of everywhere, but it does get lighter as the week goes by. So it is a weird kind of week, but a good week because wait for that CPI to come out on Tuesday. I think for Tuesday AM, Tuesday PM should be a great day to look for opportunities. Wednesday entire day should be great to look for opportunities. And if you weren't able to really capture anything there, I think by Monday, Tuesday, and Wednesday's closed, you'll have a narrative of what could potentially unfold to end the week, Thursday, Friday, expecting that we haven't cleared any liquidity on that end. But right now, Wednesday, number one best day to trade. Tuesday and Thursdays would be kind of second best days to trade, and then Friday would probably be your last bet. I don't touch Mondays. Any questions here before I get into the charts? Alrighty, we'll go into the charts. Okay, DXY. So let me make sure I recorded this before Henry kills me. Yes, okay, we are recording. Okay, DXY on a weekly, basically kind of what we talked about. This hasn't been trading in tandem with indices, so please keep that in the back of your mind that we have been moving in a mixed market, and I think that will offer, once the mixed market kind of breaks, I think that'll offer some lower resistance liquidity runs than we've been seeing. I think last week was a lot more high resistance, and that's because when you're asking yourself why is ES in such a high resistance liquidity, it's probably 9 times out of 10 because it's going in the same direction the dollar is, right? When those indices try to go in the same direction as the dollar, it creates a high resistance liquidity run. Well, what's a high resistance liquidity run? It's where the market finds a lot more difficulty getting to the liquidity pools rather than just going straight there. You have a lot of chop back and forth. You have a lot of seek and destroy templates, price just aiming for highs and lows and fair value gaps not being respected and order blocks not being respected and breaker blocks not being respected and coming back and staying long and not just short sweet to the point, right? And that's because they're not supposed to go together, and when they do trade in the same direction, you tend to get those conditions. So on a weekly on dollar, it was what we were expecting. So I had the consequent encroachment of this wick. We pushed up into it. I had the equilibrium of the previous week's candle. And you can see we basically made the high there a little bit over it. So the high of last week came in at 106.006. We were looking at 105.974. We were also looking at this BISI to see if we could use it as inversion. You can see we pushed up into it, completely filled it, but did close actually back below the consequent encroachment and almost outside of it. You can see we got just close to closing outside of it. So all good there. On a daily time frame, right, we were looking at a couple things, right? We had this breaker, and you can see how we were very respective of the bottom half of it with regards to closure, right? We came up, we hit the equilibrium of the previous week's range, and then was able to close back below the consequent encroachment or midpoint or mean threshold of this breaker block right here. It would not be consequent encroachment, it would be a mean threshold. So from there, we fully filled the SIBI on the daily. So I would like to see price, if it does not want to hold this week's prior week's high, I would like to see it just maybe spike up one more time, take out the previous week's high, and start heading lower into the sell side, right? Kind of looking and expecting for a price like lower here. Now I know that this is here, but I would prefer this to actually stay open. It's not going to invalidate any bearish directional order flow that I see, besides the fact if we close above this volume imbalance, and I mentioned that there. Now, if I go back on a weekly, you can see that where my sell side target is where this tiny little inefficiency right here. We've got a tiny little BISI, and I think that that's where we could be heading if we go lower. Something that could potentially tell me that we could be going higher is if we actually close this week above this BISI, right? So if following this week, if we where price closes at the end of this week, if we're above this BISI, I could see price potentially coming down into here and being used to go back above buy side. But that's not what I favor right now, right? That's not what I favor. Michael was talking about how a lot of people will tell you both sides of the market, but they won't tell you what they favor. And I'm here to tell you that I will always try my hardest to give you both sides of the market, but I will be certain on which one I favor, right? Because I am human and I can be wrong. And sometimes I can have my directional higher time frame bias wrong for a week or two before I have to readjust and whatever the case is. But over time, I will make sure that always give you guys what could potentially unfold, but make sure that you know where I weigh with my opinion. And right now it is to the downside. Going back on a daily, right? If we do want to get a little bit higher ended, there is another breaker block right here. And I would really want this one to be sensitive to the bottom half. So if price is going to go higher, I would want it to go no higher than 106,500, 106,400 actually. And I would really want to see a delivery lower following. I would want to see price start to get in gear and displace if it chooses to go that high. I think that just where we closed from the previous week, we're so close to the previous week's high that we could just decide to nick up above it one more time, take that liquidity, and then start going lower. On a daily, that's really all. We've already pushed up into a premium and respected it. We did get that, so it might not want to take that high. That's just going to have to, see with CPI. It's where price is and what it's done prior to that. There's not much that I can say and have too strong of a bias and opinion on specific highs and lows holding until after that CPI release, right? Because if we've already taken the previous week's high, if we've already taken this high, we've traded into here going into Tuesday, right? Prior to CPI, when CPI releases, I'm going to really want to expect price to actually go lower, right? And displace this way. But if for whatever reason we haven't taken that, right? We haven't taken that and we're still just kind of playing in a range, right? It's a 50-50, right? It could shoot all the way up, right? It could shoot all the way up and displace through all this and kind of give us a bullish scenario, or it could just grab it really quick, grab the previous week's high, and then just go all the way back down. Right, so we could get choppy in here, and you could see seek and destroy templates, right? You could see something like this going into CPI. It's all about where we're heading going into CPI, and so I can't say too much and be too for certain going into the first half of the week. Any questions on dollar before I go into anything else with regards to ES? A couple things to just note if you're going in on smaller time frames, right? A 12-hour time frame. We've got this BISI right here that we've inverted. We've got another BISI right here that we've inverted, right? So we're kind of using the idea of any prior past BISIs to now be potentially used as inversion. On a 4-hour, bring these areas back. I would say also if we're looking at fulcrum points, right? A couple different areas where you could use fulcrum points, right? This right here, this move higher, and even this move higher, right? And I like that these negative ones, right? You're always looking for extension points to be where? Above highs and lows, right? You've got this extension point right below this low, You've got this extinction point right below this low, right? That's key to note. And if you can see right here, it also lines up with this low right here. So just even these higher time frame fulcrum points, something to note where we could be aiming for, right? And to me, I like the idea of price delivering back below those lows. Like gun to my head, directional order flow bias. Any questions on DXY? Really kind of same ordeal, right? We just last week kind of spent most of the week just retracing. I think all last week was just a retracement higher. Now it's just an idea of, okay, well, where can we find that high, right? Where could price potentially come and break some clear structure in here, right? To give us that signal that we are going to go lower, right? So it's not that the high is set in yet. It's just where can we start to identify where market structure might actually break, and we can start to understand where the opposing liquidity can be cleared, right? So when we get into this week's exercise, I think it's actually very unique, and I think it's one of the best exercises we've had. I think it might be one of the hardest, but I think it'll be very good for you guys because it requires a lot of study and focus, but it can yield very good trades. And I think it's something that every trader needs to kind of start to understand and study. So curious to see where the week opens. Obviously, we're going to open here, and then off that opening, right, do we press higher and then go lower, or do we open, go lower, press higher, and then go lower, right? It's the idea of this seek and destroy templates. And as we get into the later months of the year, later in November, in December, and January, right, you're going to see a lot less of this, right? You're going to see a lot less of this, and you're going to see a lot more of this. Right? That's just the way the market moves, and that's the seasonal tendency behind it. You have to understand that. The way you trade and the way the market trades, you have to be adaptable. You have to be, last year I did not really trade at all. When I first heard Michael talk about how he did not he did not trade this time of year, that's such an eye-opener, right? If he's not doing it, why should I be doing it? The person who really created this and taught me all this, who knows every single model, every way to trade the model, all the prices and all the times of every little thing that he's built, and he still does not feel the need to trade, that gives me an obligation to really question that and be like, why? Right? And I found out willingly, and really the only way you find out willingly is by trying to trade how you traded all year in a time like this. It is very, very difficult. It is very, very hard. And I have found through my experience, through my evidence, through my proof, that yes, it is very difficult. Overall, the market will find a way to reach its liquidity, but the manner and the way it moves to get there is very, very difficult to manage trades, to find entries, to do all these things. It's just the way it works. It's just the way it works. Yes, there's going to be a day here and a day there where it's very, very clean, and it's not going to really be on a day where you're expecting it. And it's probably going to be a couple days later after a day where you thought that you had a A+ setup. Happened to me this week. I thought I had a good setup on Wednesday. I lost both my trades. Didn't trade for the rest of the week because that's just the way I work my business with regards to trading. On Friday, very clean, easy, low resistance, all the way up to the buy side liquidity target we were talking about, right? A little bit of impatience on my end, and also I didn't see something I thought I saw, right? I saw something that wasn't really there. Any questions on dollar before I go into ES? Let me check it. All right, looks like we're good. Okay. ES. Let me wet my whistle. Okay. Buy side. That was the main focus of this week. Really nothing here too much on a weekly, besides, obviously, we do have this weekly volume imbalance. Right? We've got a weekly volume imbalance, or volume amounts. We've got a weekly BISI right here that has now been created. If you note, I'll take this off for a second. The low of this week, if you can see right here, these 2 consecutive down close candles, order block. Why? Because there's a swing point here, right? Where's the open of this order block of these 2 consecutive candles? Why is it not just this candle, Carson? Because the down closure originated prior to the low being taken up here. Even though the low wasn't taken, price pushed up and then back down. These 2 consecutive candles can be used because here's the swing point, right? So as we close back above the open, right, what's the opening of this candle? 43.56 3/4. What's the low of this candle? 43.54 1/4. Right? We dug into it 2 points and then went higher. And now we're attacking the buy side, right? We're revisiting these areas that we had talked about. Now, when you go on a daily, you can see where it could have gotten a little bit tricky. Now, in hindsight, you had a daily BISI right here, and it was super easy to just sit on your hands and wait for Thursday to deliver into it, Friday to take the previous day's low, or Friday to take Thursday's low, get near the consequent encroachment of this, see the sensitivity, see the break in market structure, and then trade whatever break or fair value gap you see. But the thing is because of the previous candle closure and how quick we've been to rally, right? A part of me going into Wednesday actually wanted price to leave these. I wanted to leave these unfilled, right? And even though we didn't fill a whole lot of it, we filled it, and that tricked me. I went into Wednesday with the idea thinking that we weren't going to fill these, right? That's where me as a human, me as a trader, have to realize that we're not always going to be right, even though the buy side played like we all talked about, right? We were bullish on it. I was bullish on it. I was just bullish on it 2 days earlier and didn't quite let certain things come to me, and I tried to force a little too much, right? And that's okay. It's just how do I react? How am I aware of it? Do I journal it? All that stuff. And I'll show you guys those trades later. But beautiful delivery on the daily, right? And now a couple things that we can start to do is we can start to note that if dollar does start to go lower, right? Because you got to think about it. This went higher. This went higher. The XY went higher. But if I have the expectation that dollar should go lower, and we don't want them to be in a mixed market forever, and if they're not going to be in a mixed market forever, then hopefully that requires ES to do what? Continue going higher, right? So a couple things to note with regards to ES going higher, right? This weekly fair value gap, right, also aligns with a little bit above the mean threshold of this order block. Okay, so I would be looking on a weekly. I would really just be looking for this fair value gap. Now I'll put this back over my chart so y'all can see it. We're going to a daily, right? Notice how we took the high but did not close above the high. So that's something that I am keeping in mind. Right, we closed almost right at the high, right? This high comes in at 44.30 and a half. We closed at 44.30 and a half. So we closed right on the liquidity, right? That's so cool to me, right? That's the stuff that's so cool to me, where if you guys can go back and read, and I'll show you guys, on Wednesday when I was tweeting, I was very clear about buy side liquidity being 44.30 and a half, exactly where we closed this week. And I didn't even make money on it. That's okay, right? It's not, there's no, just because I didn't make money doesn't disprove any of this, right? It doesn't, that's the beauty in it. That's why it's so easy not to quit because you don't need your results in the market to be proof of the concepts actually working. The concepts work, right? And they're a lot easier seen in hindsight, especially when you're new. But over time, you start to realize that really a lot of the making money part of that is really just an internal reflection and understanding and understanding of myself. And over time, I can gain that and I can refine that and get better with that as I not only one increase my knowledge in the markets, but then also increase my knowledge and my whereabouts of who I am as a person, where I am right now, where do I see myself, and how do I get there. So we are approaching uh, these TIBIs on the daily. Now, a couple things I will note. I would say, going into this week, I would expect price to reach up into here, right? And I think that that should be your forefront, right? Seeing how price reacts in here. I would really like to see price close above that. Use it as inversion and go higher, right? You got some areas in here. Start to maybe take these highs. We still have this volume imbalance up here. If we are going to really fall on dollar, right? So this is a bullish scenario. If we just keep going higher, that's something that I could potentially see. I could also see price pushing up into here, CPI being released, price coming all the way down here to fill this weekly volume imbalance, and price coming all the way back up, right? And what does that look like, right? That looks a lot like this. Seek and destroy templates, right? That's something that could very well happen, right? I think the only thing that has me go bearish on ES right now is if for whatever reason price just closes below this and doesn't have a willingness to get back above the consequent encroachment, right? At that rate, then yeah, we could see dollar going, or excuse me, ES going lower. But I don't really see that occurring. I would still like to focus on the idea of if we're looking at fulcrum points, right? And we actually now have a couple breakers we could use. Right, if we're looking at fulcrum points and extensions, right? You've got your -1 extension from this last drive lower, right? You've got this -1 extension point right in here. So 44.5775 would be my main opening target to go to with regards to where price could trade at the earlier half of the week. Moody downgraded the U.S. debt. Sorry, we got a question in here, guys. I'm going to read it before I forget about it. Moody downgraded the U.S. debt to negative Friday evening. Don't you see that as very negative? Yes, I see it very negative for the dollar. Right? So why am I bearish on dollar? Well, one, for things that I see in the marketplace, but then also what's going on in the world, right? And what's funny is a lot of people think that that's going to affect stocks and all that stuff, and it is. Now, if for whatever the reason is, the second that the dollar shows me any sign of bullishness and goes against my current bearish analysis, I will be very quick to turn and understand why I would be turning and going into a bearish mindset. But I believe we actually do get a rally in indices going into the rest of the year. And I do think dollar finds a little bit of relief, or not relief, it finds a little bit of downside because of how overextended we've been since June and July, right? I don't think dollar immediately just goes and regains ground again, because then that would send indices down. But I think that everything being talked about Fed-wise, will send dollar lower and give a little bit of weakness to the dollar. And when the dollar is weak, indices rise. So I do believe we will at least see a little bit more extension to the higher end of prices going into the end of the year. So I do see it as very negative, but I see it negatively correlating into the dollar, not the indices. Does that make sense? Not a problem. Good question. Very good question. I like those types of questions. So another thing to note too, going into this week, is on a daily, we now have a breaker, right? And it may take time for this thing to really fill itself out, but we do have a breaker. And you guys know me, and you guys know how much I love breakers, right? So going into here, we have a low, a high. We take out the low. We're starting to take out that high now with displacement, right? So if for whatever reason the week starts and we start to displace through this, right? If we start to really find an area where we could displace through it, a great area for a potential retracement would just be back into here for price to then go higher, right? And you can see from that fulcrum point, right? If we really want to start to get over exaggerated, this -2 lines up perfectly with all three of these highs, right? You got a high here, high here, high here, SIBI, volume imbalance, right at the -2 extension of that fulcrum point, right? I'm not too worried about this yet. I need to understand price action, and my main focus will be right here. But it's something to think about, right? If we are going to get bullish. And I am going to be long-term bullish on dollar over time. I do think I see dollar going higher. I just don't know if we hold this, right? I think over time, all we've done this year, right? I think we've retraced a little bit more into this area. I would like price to at least come take the sell side, right? And then go higher. Something like that. As deep as 103,400, right? Now I could be wrong, but that's kind of what I see through my analysis and through my eyes, and where the rest of the year could kind of unfold. Now, how could that correlate into ES? Well, as we go lower in that retracement lower viewed as on dollar, where could we go higher? Well, we do have liquidity pools up here, right? And we do have inefficiencies and volume imbalances. Will we go that far? I'm not quite certain, because we also found out this week on NASDAQ that NASDAQ is obviously the leader, right? NASDAQ has been showing the willingness to go higher with no reason to go lower. So a couple things to note on the NASDAQ, right? We delivered into this BISI. Look at the closure, little mohawk, that's okay. Closure. Now we've relieved ourselves, and we've now broken a little bit of structure, right? You could start to utilize this as a breaker, right? Start to use the 50% of this candle, right? And then from there, see that if and when price chooses to deliver back down into that area, right? How do we respond at this previous week's high, right? Do we just go into it and go higher? Or do we get a little bit deeper? And do we visit this BISI that we just created, right? Going into a daily, very clear, right? Breaker right here. Low, high, take out the low. We're now taking out that high, right? So it might not want to come back down to these levels, right? Look at how strong it's been willing to show itself, right? And this looks like it's a lot closer, right? This point, and this point are the same areas that are right here on ES. that looks a lot easier to obtain on NQ than ES, which is why I'm not certain that we might even get up there, right? We could come up into and as far as this BISI and then just go lower. Maybe the dollar is where it needs to be by the time it gets there. That's why you want to just start to maybe have some idea of if and when these indices start going in certain directions, right? Are they going to a certain direction to then reverse, or are they going to continue that way? Right? The way we have recovered in ES, right? We were bearish, took all these sell side liquidities that we were talking about for weeks, and then it took one little tiny closure or one little tiny candle that dipped below this low but didn't close above it, and boom, we're right back where we were in the start of October. Right? So you have to think about that, right? The time it took it almost an identical amount of time, right? It took from price to get from 40, call it 44.40. It took it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. From there to get right back up where it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days, right? So something to think about. It recovered very quickly with ease. And you could tell when it had, what's the behavior looking like? Well, when it dipped into this daily BISI, it was unwilling to go even to the consequent encroachment of it. So to me, that's very bullish. To me, that shows bullish tendencies, right? It's a signature in price. It's telling you that price is bullish. It did not want to go even towards the consequent encroachment of the first daily BISI, right? To me, I'm viewing all of this. I view all of this as a balanced price range, right? Price offered sell side, price offered buy side, right? Yes, there's volume imbalances in here, but that's something that Henry had talked about later or last week, is about how even though there's volume imbalances, that could just give price a reason to continue at a later date, right? So I do overall see indices going lower. I think everything has a very good chance to go lower, right? If you're looking at relative equal lows in here, right? Even though we have a breaker in liquidity and it goes lower, this is still what? It is a double bottom, right? But I can't be bearish right now and expect this double bottom to be taken next week with how prices reacted in the start of November, right? We could just find a high in here and just range. That that could be a low. We could find a high in here and just range in here for the rest of the year, right? We could just play in here for the rest of the year. Who knows? No one knows. That's why you just take it day by day and you have very short, clear objectives that you want price to fulfill, and then you readjust, right? What would that be? It would be 44.57.75 to start the week. Once price gets there, I will see how the daily responds and closes in and around this SIBI, right? I cannot push past that as a trader, I cannot. Because everything then, it just now gets into these, well, this happens and this happens, and it starts to break. So the best thing I can do is have one clear, concise number that I'm visualizing, and then on that number, where's that array? How does it behave, right? In this case, it's 44.57 3/4. From there, it's once that delivers, how do we respond inside this BISI? Do we close above it and act as support? If so, I will then view these areas as buy side. Do we come up and hit it, reject it, and start to really see a willingness to go lower? Okay, well, in that case, I will utilize this breaker on the daily and see if it wants to basically still use that as support. And if we do not give any respect to this and we start to close below it, I know that yes, we can fill all this. And that's perfectly fine, because if it shows me a high, guess what I can do? I can find the low, find whatever high it takes, find the equilibrium, and understand that, okay, we're probably just going to retrace back into this range. And we might just go as far as going back into whatever discount it is, right? There's still discount arrays here. There's a breaker right here. It's just, yes, that could happen, and that's a model, and that's very clear to me, but it doesn't make sense for the way price has been moving now, right? It's, you have to trade what you see, not what you think you see. I think I see a lot of different things. I see how it could play bearish. I see how it could play bullish, right? I could see both scenarios playing out. It's just, where is price right now? How do I dial in? I need to have one clear, concise objective that I'm trying to meet in an area where I can start to begin my if-thens. And let's say it just doesn't reach up here, right? Let's just say it doesn't get up here at all this week. We took this buy side, we closed at it, and it holds this high. I'm not saying that's going to happen, but let's just say theoretically it happens, and this high holds. We don't even come up here at all, right? How would I start to understand that? Well, if it wants to do that, then guess what? Odds are it's going to come down into here. And let's say it breaks through this BISI. Okay, well, you watch the C. Does it utilize it as inversion and go lower into this BISI? Okay, well, how does it utilize the consequent encroachment of this BISI? Does it break it and go lower? Right? It's all a game of narrative and seeing how price responds and closes, responds and closes. Okay, let's say it comes into here, right? It might use this one as inversion, but then once it gets into this one and touches that consequent encroachment, right, then you might break structure. You might be coming all the way back up, right? There's so many different scenarios. That's why it's just sticking with one clear, concise array that you want price to trade to, understanding what liquidity it's already traded to, right, the buy side, where it could continue to go, and then understand that it's all just a game of closure and narrative, right? If dollar is going to go lower, we need to see this go higher. If dollar continues to go higher and this goes higher, quite frankly, it's an environment that I don't want to trade in. And who says I have to trade in that environment? Right? I traded ES this week when it was trading in the same direction as dollar, lost. Okay. That's just another evidence to why I shouldn't trade it, right? And yes, there are exercises and stuff like that, and we always want to continue to do the exercises, because sometimes the exercise doesn't show you. You don't learn the exercise from winning or losing. You learn it from understanding the market conditions, right? Going in and trading that training exercise that you did this week while ES was going higher and dollar was going higher. If you lost, good. If you won, good, because guess what? You realized it was hard and that you probably don't want to do that in a live account. And you would rather be patient and learn to be patient and watch the dollar go in a direct opposite direction as ES clearly and have that low resistance liquidity condition, even if it doesn't unfold until the very end of the week. And sometimes it doesn't unfold in the entirety of the week, and they are in mixed market the entire week. But the thing is that they're not in mixed market conditions forever. Right? Let me check the chat really quick. All good there? Is this stuff making sense to you guys? Hopefully it is. Let me get a sip of water. So I'm viewing higher prices. There's nothing here that's telling me, yes, we've revisited this, but we also know that with price reclaiming certain areas, they can sometimes not be used as much as they were, right? Price used this SIBI right here, came all the way down. We saw that. We caught that. We talked about that in the community. You guys witnessed all that, right? Price went straight down. Didn't quite get as far as we wanted to, and has had a very relieved price move higher. Now we're back in the SIBI. The idea that it's going to do the same thing again is a little foolish, because it utilized the SIBI to then take what it was supposed to do. It did what it was supposed to do. Now that we're back up here and we've already gone back above the high, shows me that this is not as strong as it once was. Doesn't mean that it's not there and it's not useful. But if we're sitting here and if I'm going to take this off, take this off, take this off, take this off, I'll even take this off. Right? If we're just looking at the SIBI, right now we've closed above the consequent encroachment of it and took out a high, right? Something where I would want to see price do this. Right? Come up into this area. Is that a support? Now we would be using this SIBI as support because we would have broken through it. Right? And then there's a little tiny SIBI right here. Right? Price could, that's right now what I potentially see price kind of doing. Just kind of chopping its way higher and higher. And there's a tiny little volume imbalance up here. And then seeing where NQ is at that level. Right? So we go back to NQ and we start to see that price had a tiny little imbalance here. We've got a breaker. Same thing, right? If I take all this off, still looking for price to go higher. Clear levels that I would want it to trade to. But then also, right, there's a SIBI right here that was used to take all this sell side, get that very nice fill. Now look how when it traded back up to it, didn't really want anything about it. Did not use it the way it did right here. Cut through it. Now what would I expect? Well, I would expect it to use it as inversion. It's not that this is not now useful. It is not useful with regards to how you would have first initially used it. It is now useful differently, right? It's now used as inversion, right? I see something like that. I'm unfolding. If you start to even look through, right? Look at this BISI that was used as inversion, and now we're closed back above it. Beautiful. Closed back above a BISI. Now I'd like to see this use the support. And as strong as NASDAQ is, I really would not want any of this to be filled. Any questions on these charts before I might go ahead and get into the training exercises this week? Go over the ones last week and then get into the ones this week? Okay. Well, we shall see how that plays out. I'm going to go ahead and go into, oops. Let me, and I'll even show you guys too. So I know that you guys know that I was kind of posting up a storm here earlier this week. Right, and this was when I was expecting price to not fill that daily BISI. Everything that I was posting kind of got invalidated. But you can see right here, the first thing I tweeted, very first thing, right, was the idea that buy side was 44.30 and 44.30.50. Just took a couple days to get there. Now I'm going to go into the forum. If anyone on this call is new and you guys don't necessarily know how to work this, the back end of our website and our platform, please let us know. You could DM myself or Henry. Now, going into last week's exercise, right? We're back with the exercises. We took 2 weeks off. The idea was to try to find pyramid entries, at least one. I will start with, we'll just go down actually. Okay, so we'll go with Ismail. So waited after Fed spoke at 2 p.m. for confirmation that we will see lower prices. Went in the breaker, fair value gap with a tight stop above the breaker targeting the hourly BISI. My stop should have been above the high as I should have allowed price to trade to the mean threshold of the order block. However, we already sold off a lot post 1 p.m. and price never reached my target till Asia, even though the setup was there. Not best condition to short as we were deep inside the discounted range. Position size 10 contracts P&L. Okay, so that's fine. He's identifying the breaker, right? He has a high, a low. He takes out the high, kind of takes out the low. One thing I would add to what I've found about breakers, yes, this is a breaker, but I have found breakers are used so much more. They're respected so much more and they're so much more sensitive if there is some form of displacement. Yes, you have this displacement here, but it is tricky when you kind of have this like, it kind of went through it, kind of came back, didn't really respect it. And even here, I mean, this is close, right? You had the right idea. Should have had it at the high, but many times I play the breaker also. So I can't fret you for that. And that's why we're in high resistance liquidity conditions. It's going to do that. It's going to be sensitive. You're a lot more better off putting your stop at a higher low. And even then, we're in a season where seek and destroy templates are very common, and so it's very hard. It is very hard. I think you had the right idea. It's just I think the entry was fine. I think the idea was fine. I think theoretically, if you take this trade in June or March, you win the trade. It's just the way it is, right? But you're learning. You're learning how to condition yourself for a lot harder seasons of price. Nothing bad there. I mean, yeah, like you said, it looks like it just consolidated. It never even really reached your target, and that's perfectly fine until Asia, as long as you know that you got obviously the direction right. All that stop management stuff, it'll get better over time, continuously working on it. My plan from my last night was to look for sells, as I thought that we would leave buy side till next week. I'm glad I adapted after seeing the CSD and SMT at the lows during Asia/London sessions. And Q was showing strength relative to ES and presented a clear buy model. Missed my entry in the breaker as I was switching my chart to MNQ. Went long 5 contracts as price was leaving the inverted fair value gap. Added 5 more at the order block with the stop below the swing low. Could have done better job scaling out as I took 9 contracts off at the -2.5 standard deviation instead of 8. And obviously could have left a runner at least till lunchtime. I wonder, was this on the same day? This was on Thursday. Was this on Friday?
Yes, that was Friday.
Okay, good rebound. Yeah, this is perfectly fine. I think that you're perfectly fine, taking 80% off here, right? You've got SMT with internal liquidity, opposing liquidity being taken, right? I love the fulcrum point, right? I think the extensions are really good. You understand that your -4 is above something up here. I'm not sure, but that's where, previous day's high right here, right? That's where you would want to leave your runners. Perfectly fine. Using price as the inverted fair value gap, seeing that it fully filled this BISI, using this low that's inside the breaker that's already filled this. You've got a shifted structure here. Using this as the order block. Using this as obviously an inverted fair value gap. Price comes in here, you get a little bit of a high risk entry. Then you get the low risk buy. Partials are great. Runner's fine, right? I even applaud you for taking out here without it even reaching up there. I think that's a lot of people. You'd be surprised how many people will not take out here, but take out here and actually need to see it run there. I have found over the years of trading, this and this do not matter, because odds are when it's trading right here and you've got 2 contracts left on, right? Take one of them off. It might not hit that. If you only have 1 contract, I would just, it's a little bit trickier, but I would just say utilize your stop high, squeeze that stop high up there and make sure that, it doesn't really matter. Because once it gets up here, guys, if your take profit is at this previous day's high and it's right here, right, you should not have an area where price goes all the way back down into an area and you end up losing a lot of stuff, right? Because that's where that dynamic risk to reward comes into play, right? Great trade though. Great trade. Way to come back off this, right? A sticky trade where you were right, but it's hard to trade. and find a day later a very nice, easy run on liquidity, right? High resistance in here, low resistance, what we want to trade. The trick of the trade is finding out and knowing when you are in this and when you are set up for this. Great trade as well. Look at his trade log, right? I love that you guys are adding that stuff too. This is good. All right, me. So coming off the 12 weeks with percentage gains. I told you guys I was up 10.7%. I lost 1% this week. I lost more than I should have. First thing I'm going to say, I was not trading micros. I was trading in the minis. I thought I was trading in the micros. That is a human error. That is a mistake. That is a mistake I've made, I think, twice on this challenge or on these exercises. And it should show you how crucial it is for you to make sure, and me to make sure, that you are trading what you're supposed to be trading, right? Because I ended up losing double what I wanted to, right? Even though it was just 1%, right? I went from 1010 to 109, 1010.7 to 109.7. That's fine. I understand it. I took it. But still, it's just an easy error that can be easily fixed, right? Key takeaway, I was trading ahead of the 950 macro when I should have been trading in the 1050 macro or just getting ahead of it, right? I didn't trade it all the week prior to, so I was rusty. Didn't have clear sight of time right there. I was trying to get ahead of a macro when the macro would have actually shown me that it would have been viable to go short. But before the short even offered the opportunity for me to see it, I was already out of the market, right? I had this was probably one of my sloppiest weeks. And then I was trading before seeing clear closure through a higher time frame array, right? So my idea was to see how price behaved inside this bullish breaker block, right? Low, high, take out the low. We ended up taking out the high, seeing that we were respecting it. We pushed up. I wanted to use this SIBI as inversion after closing through it. So once price actually came in here, it didn't even close, which is another reason why I probably deserved to lose this trade. It did not even close above the SIBI, which technically still utilizes this as a valid SIBI and not inverted SIBI. Price comes down into here. I'm trading this as the idea that it goes in inversion. My stop is below this breaker, by the way. I forgot to add that. This was around Powell speaking right after it. This was from 9:40 to 10 a.m., 20 minutes. Price was unwilling to utilize the higher time frame PD array as inversion and respected it, right? So my idea was I was getting in on this SIBI as inversion. As price went up, I wanted price to close above this daily rejection block consequent encroachment and use that as inversion and use that as my pyramid technique. So I got in here, stopped here. When price showed me this candle right here and closed above it, when price came back down and tapped into this, I bought. My stop loss was at the consequent encroachment of this SIBI. It got hit. I then immediately got back in on a buy as we were pushing. As this candle closed back above the consequent encroachment, I bought here with my stop loss below this low. It got hit immediately. I mean, like immediately. Put in the trade, got hit. There you go. You don't see a lot of people. Oops. You don't see a lot of people that are willingly ready and don't mind showing you that, yes, like I had a terrible trading week this week. Now, numbers wise, it was fine. I lost 1%. But just with regards to who I am and my standards that I hold to myself, right? It was not a good trading week, but that's okay. Why fret on it, right? Why would I fret on a trade like this, right? There's a reason the windshield is greater and bigger than the rearview mirror. It's because what's in front of you is a lot more important than what's behind you. This is behind me. I know what I need to do. I made silly mistakes. It's fine. I'll get better. I always will get better, right? That's the whole point of it. I don't want to stay the same, and sometimes it takes stuff like this to really kick it in gear, right? Alrighty. Miss Kate, narrative. I was leaning bullish after seeing the overnight price action. It looks to me like we retraced into an inefficiency and discount from yesterday and bounced from there. This is what I was seeing on a 15-minute prior to the open, right? So she's got a fair value gap in here. Price takes out the liquidity, fully fills it, goes higher, utilizing this as a breaker. You can see this order block right here. She just sees price going higher. Previous day's high. You can't see it, but it's outlined here. This is the top of the daily SIBI, right? This is the middle of the range, midnight range. I'm assuming M range, mid, maybe. Previous day's low, and the bottom of the SIBI on the daily. Trade idea. I marked out a 15-minute order block pre-market. After price held that level in the 15-minute breaker, I thought the down move from 930 to 937 could be seen as the 930 Judas swing and began to look for a long entry. After price closed above the previous day's high in a tiny SIBI, I entered long as price returned into this area and added 2 more contracts. Emotions before, I had no emotions. I was fairly confident with my idea and was willing to accept the loss if I was wrong. During a little bit of excitement at first when price quickly moved in my favor, I calmed down after taking the first exit though, because I knew the hard work of not exiting too early was just beginning. I remained fairly even keeled for the rest of the trade. After, happy that I was able to hold the trade to target, but have to admit the first partial really helped. I don't think I would have been able to do this as a full pull, but I'm learning to trust my analysis and let price action do its thing. 11-minute trade, 3 contracts, risk to reward being taken at 2.76, 4.42, and 7.24. Time of day, AM on Tuesday, November 7th. PD arrays used. Inverted fair value gap and previous day's high, drawn liquidity, 4-hour buy side liquidity. Stop loss was at the top of the daily SIBI and wick, consequent encroachment of the order block. Partials, consequent encroachment of the BISI, the high of the 930 open, and the break even came after the first partial, right? Beautiful trade. Beautiful trade. Beautiful trade. And I'm getting the chills right now. Because I'm starting to see you guys really, really, really dial into price. And I think that these training exercises have been actually very helpful to you guys. Kate, you have done almost every single one, and you've had good weeks, bad weeks, but just seeing how you've been committed to the journaling, all that stuff, being super transparent about your emotions, all this stuff, I can just see it slowly unfolding, right? And that's not here to blow your head big and give you a big ego, but I will applaud you. And there's several others that I will applaud, even the ones that aren't having winning trades. But this is you're finding yourself in this. You're finding what works, and it's proving itself. It's not me. It's not anyone else. It's just this is a great example of pyramiding. Yes. Partials. Yes. Analysis. Yes. Time of day. Low resistance, yes, right? You're checking all boxes and you're being a great, great, great role model in the community and showing individuals of you always show up. Sometimes you've had some weeks where you've just been like, I really went against it, right? But look what 1 week does, right? Now you're starting to catch up to me, right? Now you're starting, and it's not a comparison game. Comparison is the thief of joy, right? You're going at your own pace, doing your own thing, and you know that. But stuff like this is really exciting to see. It makes me feel good because it shows that this stuff is really, really working for you guys. This is awesome. This is a great trade, right? Are you going to have it every single week? No, you know that. You know that. But I very well applaud you and say that this is one of the best trades I've seen you take so far this year. This is probably one of the best trades I've seen anyone take in the community so far this year, right? Not just you or everyone else, but myself and Henry, right? You're killing Henry right now in this training exercise. And I know he's going to be back watching this recording and he's going to be licking his lips. But great trade, Kate. Great trade. This is awesome. And I love that you guys are giving feedback to each other. This is all good. All right, Mr. Axel, 20 minutes after Carson writes that he sees nothing he likes in the market. Not much to comment on. Entry was premature, had the wrong narrative, didn't give enough time to the market, didn't give enough time for the market to breathe. Overall, okay with the trade. Risk management was sound. No negative emotions, just something to improve on. Thought DXY would reach for the daily re-imbalance, but just fell short. Risk to reward was 4.35. Profit and loss was 410. Duration was 7 minutes. Target 1 hour BISI, new day opening gap. Besides getting in on what would be a SMT too early, any advice is appreciated. All right, so let's go into it. I actually like the, I'll go into this one first, right? I think you might have traded the in and around the same area I did. But the idea was obviously you wanted the daily immediate rebalance. You're expecting price to go higher, right? After the daily order block was disrespected. When we get into here, right, the idea that price was going to utilize this SIBI, right? You can see that. Now, I would say there's a couple things here, right? And I think that you kept your stop loss, right, where it should be. So it's not that the stop loss was wrong. It's not that the entry was wrong or anything like that. A couple things to note is the idea that you wanted this to be a runaway gap, right? And then it touched it, right? So you're something price is already showing you something that's going against what you thought would happen, right? It closed above the SIBI, very very thin, but this is a very exact thing. Very thin, and then I would also see that this BISI right here, right? I think understanding this BISI would have helped. I think it was kind of hard because I don't know if this is the same day I was trading or not, but you know, I utilized this as a breaker. You know, you did the same thing, right? You had the breaker and liquidity, but it ran. It didn't want anything to do with it. I think it's just November. I don't think that there's anything, you know, it being bearish on it, I think is something that you have to also just ask yourself, right? Is it really worth being bearish on it, right? We have been bullish, right? I'm a big believer on if you have one main level that you believe in for that weekly liquidity, I think it should just be always trying to figure out a way to go into that direction. And the thing is too, is you start to realize, right? You're looking at the dollar to go higher, and that would, in theory, allow ES to go lower. But we're in a mixed market condition, or at least were this past week, right? When I sit there and I see dollar going in the same direction as US or ES, it's something that should raise a flag, right? It's very hard to trade in that scenarios, right? Because yes, 9 times out of 10, if you are in the correct market condition or the easiest market condition you can trade in, this probably went higher, this goes lower. Didn't quite play out that way. But it looks like you got some really good feedback here. I'll even read over it, right? Trying to get it to fit our bias, right? Not having the DXY and ES really go against each other, right? Kate gave amazing feedback here. I'm not going to go quite all into this because this is in depth, but you know, if you guys are, you know, I know Axel probably read this, but it looks like you guys were really going into it today. I was so out of touch today as well. I took another price action. I took a buy on the retracement on the 15-minute. Okay. It was poetically ironic that yesterday's price action and today's were the complete opposite. The only thing they had in common is that I got the narrative wrong. You know, and that's okay. You know, I think something that can help this, the idea behind all of this is like when I have a buy side liquidity target for 44, 30, 50, right? That's my main target. I'm not shorting it at all, right? I think something that could help you is having one clear target for the week and then just trading in that direction. You don't have to be a participant when it hits that level. But if you have a buy side target that you are more confident on being taken, be a buyer in the market. Only look for buy opportunities. If you are dead set on a certain sell side liquidity being taken, right? Be a seller and only be a seller and only look for setups, right? If you know that, you know, the market should go take buy side liquidity on ES, and we're in November in high resistance liquidity conditions, and it is mixed market condition, right? You're already in a year where it's high resistance. You have the DXY going in the same direction as ES. You have ES going overall higher, but you might you're trying to catch a smaller time retracement into lower internal liquidity. It's just hard, right? I think the trade setup model is okay. I think it's just all the other external factors of what's going on with the dollar, it being a mixed market, us being in a bullish market in ES, and just having that be mixed with DXY for the moment being. I think there's just a couple external factors, but overall, I think that there's nothing wrong here. That the model in itself, the theory behind it is fine. I think if this was a bearish market in the middle of June, you would have yielded very handsome results, right? It's just understanding that there's always these external things that we're fighting, right? But that's why it's demo, right? That's why it's a training exercise. All right, let's go into this week's one. I'm actually super excited about this week's one. I'm not going to lie. This might be the one that I am the most excited about. Please, guys, Alan, Axel, Kate, Ismail, all you guys have been doing them, and I know hopefully that they have been working out. If they aren't even helping you, they at least give you something to do. If you don't know where to trade, if you don't have money to trade, right? This is super easy. Just open up a demo account on TradingView, open it up with $100,000, whatever you really want. We all started ours with $100,000, and just try to do them, right? If you have live accounts or funded accounts, keep those on the main focus, but especially as we get into this part of the year where it's going to get super high resistance and it's going to be a lot harder than it would most parts of the year, utilize these as a safety net to not go trade live funds. I think that that's something that a lot of people aren't taking into consideration, and sometimes they might be scared and they might be not open to sharing it with the community. Guys, everyone wants the same thing. We're brothers and sisters. We all want each other to grow. And the way I see people give each other feedback here, not just myself, not just Henry, but the people that are also super active, Axel, Alan, Kate, Ismail, all you guys are really good at giving each other feedback. And I think that, for the ones that are watching this recording, if you're thinking, oh, well, it's just a training exercise, do them. Trust me, do them. You might not know what you're doing and you might fail miserably, but do them. You will learn something that you didn't previously know. I think it's super important that you get out of your comfort zone. If you're watching this video right now and we're on 13 weeks of doing training exercises and you haven't done one, why? Why? What's stopping you? What excuse do you have? Right? There's nothing stopping you. Maybe you don't know any of this stuff. Okay, go start back. There's 13 of them. You don't have to do this ones, right? You can do other ones, right? 2 of them have no trading in them. So technically there's 11 that you can go choose from. Go choose one that you might know, right? You don't have to be on the same, just because you didn't start when everyone else started. No, that you could go find anyone, right? You might be new and you don't know anything, but you might know a couple of the words or whatever the case is, and there might be one training exercise that sticks out to you. Then I'm going to test myself. Do it, right? Do it. Let myself or Henry know that you did a previous one, and we'll go look at it. We'll go review it, right? Not only is it for you guys to just try to see how you do, but it's also to see how we respond to it, right? The feedback we get or give, the feedback we give. Not just me and Henry, I say we as the community, right? This is the stuff that I needed, that I really, really wanted when I was going through this stuff. This stuff would have been so fun and exciting for me to go in every week to just have an idea of something, right? This might not be where you are or what you're looking for throughout your training or your trading. But if you're lost and you don't know where the hell to start, or you don't know where to go, we're giving you an underline of how to trade. If you've noticed, just keeping you guys at bay with 2 trades. And I would love someone in the comments to even post who's been doing this for a couple of them or all of them, whatever. There probably was weeks prior to doing this where you would take 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trades a week. just in hindsight, looking back, you've only been taking 2 trades, 3 trades max, 2-3 trades a week. We're giving you guys that, just the idea of being picky and really honing in on the market, win or lose, but giving patience in hours and minutes and days in between these trades to let them breathe and let you breathe and come back to equilibrium, right? So even just this part of it, right? Risking 0.5%, not 50% of a trade, right? If you win, stop. Teaching you guys how to win a trade and just stop and not be greedy and keep going and over trading, right? If you go to break even or lose your first trade, giving you the opportunity to go back in and the correct risk of being mindful that you lost your first trade. Yes, there might be another opportunity. Be responsible, go back in with the current adjusted risk of half of what you lost, right? If you're in drawdown and you're not in profit, already having that adjusted risk, right? And if you win that first trade, try not to reach and get it all back in one. Stop. If you go break even or lose your first trade, same thing. You can go back in at 0.25% risk, right? Giving you guys the idea to just try to shoot for at least those 5 handles on ES, 10 pips on Forex, 20 handles on NQ. Knowing when to move break even. You might not know when to move break even, but just understanding how that works. Getting the idea behind it, playing with it, seeing where you went wrong or where you went right, and obviously always using a stop loss. But I'll talk about this week. So this week, it's CPI week. All trades for the exercise should be placed at least 5 minutes following the CPI release on Tuesday. No trades on Monday, no trades leading up to that CPI. You cannot trade this week's exercise until 5 minutes following. I reckon if you're new and you're not used to it, give a little bit more time than just 5 minutes, right? But that's where trading opens. This week's objective is to find a trade above the daily open if you are short and below the daily open if you are long. So if you are bullish on ES and you're looking to long that day, you have got buy side liquidity targets. Well, your entry for this week's assignment, the only assignment is we're not telling you to hit this or hit that or hit this. We want you to be a buyer below the open if you are long. If you are short and you think ES is going to go lower and you have sell side targets, we want you to be a seller above the daily open. Right? So make sure in your journal submissions you identify where that daily open is. And if you're logging, it better be below. If you're selling, it better be above. Right? I think this is really cool, right? We're going to start talking about the power of 3 concept, the accumulation, manipulation, and distribution. And if you guys can understand this, right? This isn't an entry protocol. This isn't anything. This is understanding. This is one of the most powerful things Michael has given us. Michael's not here anymore, right? And I will post videos of his and we'll go over this stuff, but this is something that I really want to work on going into these next couple of weeks of getting you guys to understand the idea between accumulation, manipulation, and distribution and how that transposes across all time frames, right? Getting the idea behind of if I want to be a buyer that day and I want to take the lines portion of the trade and get that daily range, right? Odds are you got to be in and around and below that open, right? This can be very, very powerful. And when I saw this stuff, it clicked. It clicked, right? Oh, okay. It makes sense that from Asia to New York, we accumulate orders. And then during New York, we manipulate, we Judas swing. And then for the rest of the day, we distribute via time, certain time windows, but not limited to certain time windows for certain liquidity pools. And then when I can see it visually in my head. I can see it so clear. I can see the daily candle, how that singular candle opens, goes lower, creates a wick, goes higher. I can see that and how that would unfold at 9:30 on a 5-minute or a 1-minute time frame, right? Taking out London's low, right? Taking out London's low as a Judas swing and then creating a breaker and then a fair value gap trading into the equilibrium of it, having a fulcrum point set on that set little area on a 5 minute or a 1 minute, fulcruming and extending that up, having that 1, 2, 3, 4 extensions. Where does that line up with certain liquidity, right? And you don't have to catch the daily low and the daily high. Notice how I didn't say you had to be at the daily low or the daily high if you were buying or selling. I just want you to be above the open if you're short, and I want you to be below the open if you're long, right? Even if you trade for 5 handles, you don't have to try to catch the daily range. That's fine. But I would prefer you to, if you are buying, buy below the open, take out above the open, right? If you're a seller, sell above the daily open, take out and profit below the open. Start to really get a feel for that daily candle. Sorry guys, I haven't checking chat. Axel said Kate got right in where I got taken out for reference. It's all right. That's perfectly fine. You guys are learning, and Axel, I promise you, like you've been doing all the right things. You've been showing up, you've been doing all this stuff, and it's just time, right? It's working this stuff out, right? But he also said he didn't see a reply in the Wix app. I noticed how I don't see a few replies and comments and posts through this app. I was noticing that too. We'll look into it. I think sometimes it just hides it and it says view more, and it looks like everything else, so you can't really see it. And if you click into it, maybe it'll expand it. But yeah, we're working some stuff out there. Does anyone have any questions, comments, or concerns before I kind of wrap it up? Anything that anyone wants me to go over? Overall, that was good. Obviously, it's a little bit shorter. It's just me still working, trying to get some things aligned for me to be able to share some trade recaps with you guys. I really do want to get back to filming them. I'm going to try this week. To do it, especially with this exercise. I'm super excited about this exercise. Actually, I really think that actually was one of the main things that jolted my trading with regards to understanding Michael's concepts, and I think it'll be excited. And I actually want to take this week and really dive into, once I see how you guys react and respond to the power of 3, I'm going to really utilize next week's call to kind of do a little bit more of a teaching lesson. I'm going to also share in the group chat or in the social where Michael talks about that, and I'll drop his video links in there too. Because I think obviously he teaches it pretty well too. But yeah, that's really about it. A couple things to take away from today going into this week, right? I like to leave you guys with a little bit of motivation. Michael's not here, and I know I was talking about it a little bit before the call really started, but Michael's not here, and yeah, that's sad and stuff, but it should spark something in you. Even yesterday, it sparked something in me. I was listening to it, and it's one of those things where it's on you, right? Every week I know I used to do the same thing, and I know some people did it on here, always waiting for Michael's next video. Where is he saying price is going to go? It's not there anymore, right? He has all of this resource for you, everything. He's not deleting anything. Every tweet, every comment, every video, everything, right? Every trade, whatever, right? You have all that stuff at your fingertips. You have all of this stuff at your fingertips. Why not you? Why can't you just take the next 7 months, 8 months, 9 months, 1 year, and just go all in? He's got everything. And who knows? He might not be coming back. I know we all know Michael, and we all know that he is the way he is, and he is very passionate about this stuff, and he loves us like we are his children. I have never seen that from someone who I'm not blood with. The passion that he has for me and you, and how bad he wants it for me and you, right? So I encourage you, even though we're going into a market condition over the next 2 months, 3 months, where it's not ideal and you're not going to get these crazy big gains, don't expect them, right? Take this as shadow time. Study, get better, save money. You don't have to go buy a funded account every time you lose one. Save up. Let February and all that come. So then you have money and more. So you're not conscious about, oh, I just spent my last $1,000 on this funded account, I have to get it. No, put yourself in a position to win. Put yourself in a position to win. I think that if you do that and you do all the correct steps and you stay active and you do the things that you're supposed to do inside and outside of the community, inside and outside of trading, inside and outside of just everything, right? I said it earlier, right? You're when you win in anything in life, you're not as good as you think you are. When you lose in life, you're not as bad as you think you are. And the moral of that is it doesn't matter what you think you are. That does not matter. That should not strain or consent you to anything other than just continuously to try to be the best you can be. Right? And if you get to a point in life where you think that you've made it, that too shall pass. And if you think you've gotten to a point where it can't get any worse and it's just the worst it's been and it can't get better, that too shall pass. Other than that, that's about it for me, guys. Thank you guys for hopping on. I know it's a little shorter when it's just me or it's just Henry. We have lives, and we have found that it's better to at least, always have one of us here. So, I think both of us will be here next week. I have no plans that I can think of right now, so I will be here. I believe Henry will be here as well. Other than that, thank you guys. You guys are, it's going to be weird. As Michael was talking yesterday, and he was just going on a rant. I mean, he said he was going to be 1 hour. It was a 6-hour rant. And there's a lot of good stuff. I encourage you, if you don't have the full 6 hours, break it into 1 hour, 6 times, or 2 hours, 4 times. Just figure out time to go watch it. And I personally want to say thank you to Michael. I don't think he'll ever see this call. I don't know, but down the grapevine, who knows? But I want to also thank you guys, because he made it very clear yesterday that, like, we're all brothers and sisters. Like, we have only ourselves in this big thing called trading. And I highly encourage you to step out and meet someone, right? Axel, you said that Kate got in or took profit where you got out. Reach out to each other, right? Reach out to each other, right? Whether it's anyone, I encourage you to utilize this as family and help each other, right? Because I know when I'm with my family, I am perfectly fine bringing my true blood family, my mom, my dad, my brother. I am perfectly fine bringing them my worst failures and tears, because I know they're not going to judge me and they're going to try to do whatever they can to help me, whatever the case is. Utilize that here, right? You might not have a mom, dad, best friend, brother, sister, aunt, uncle that's supporting you in this. Guess what? There's 135 people that are currently logged on to First Hand Trading right now. I guarantee you there are people, if you reach out, whether it's myself or Henry or the other 130 plus people, right? Find the ones. Make a tweet. Hey, who's experienced? Right? Me and Henry have taken some time, and I think you guys might have seen it. There is a template that's pinned to the top of the social. We're going to start really going in one-on-one to you guys and really starting to see, like, not at a whole, but really understanding Leslie, really understanding Olivia, really understanding Victor, Florine, Ismail, right? All of you guys. Go in if you haven't yet filled out that form, because we're taking that and we're curating that info, and we're going to start really reaching out to you guys individually. Right? When we post that stuff, or we post these forms for y'all to fill out, whatever the case is, it's not just to fill out, right? We're gathering data from you individually, understanding what is your biggest and greatest strength and weakness. And we're going to try to figure out ways to curate things inside the community to help cater towards you, right? Just because we have it built, just because we have the back end and the social platform and the forum and we do the calls and it's a lot more organized than it was, we're still having things being worked on in the background to help you that we haven't brought to the full table yet. So, so thank you guys. And this stuff is very, very new. Yeah, if you raise your hand, feel free to talk.
Yeah, I was. What forum was that? I don't think I've.
I'll share it. Here. When you go here, you go to social. This one right here. It's just a progress report.
Oh, I see. Okay.
Yeah, it's just pinned at the top. So you can either click this and or click this. This is the same link. They'll take you to the same thing. And it's really quick. It's short. It's super short. It just asks you a couple questions. You know, and it's the whole moral of it is to really understand you. Where are you at with your trading? What can we do to help better it? What are your challenges? And we're going to start to feed into that, because even as the markets kind of die down a little bit with regards to accuracy, right? We're going to take that time. That doesn't mean that it's just, you know, okay, we can't trade, we can't do anything. No, we're going to try to figure out ways to really take that time, right? I'm not going to be trading as much. I don't think Henry's going to be trading as much. We're not going to be focused as much on our main whatever, and we're going to try to feed some time into you guys. And so please, if you have not, if you're watching this on the recording, you know, another thing is we have socials now. So you can follow us at FH Trading Group on Instagram, TikTok, Twitter, YouTube, Facebook, all that stuff. And we're posting short form content for you guys. So we're going to take all these little tiny clips that we might have when I might go on my rants, or I might, Henry might say something, or we're talking about charts, or we're marking something up. We're going to be taking 30 second to 60-second clips and posting that on those platforms. So please, if you guys can, follow those platforms, share those platforms. That helps us grow our community. And I think it's, you know, you're not going to be a full-time trader just by listening to those things, but they are nice little things to keep in the back of your mind, you know, because I do think a lot of things, not only questions that you guys ask, but sometimes things that myself and Henry say, a lot of times they get swept under the rug because it's just in this big call, and it's you never really find it. Me and Henry stepped out of our comfort zone and went ahead and put some resources under our belt to be able to catch those things and understand and post those out for you guys to see. So Instagram, Facebook, Twitter, YouTube, all that good stuff. Go ahead, follow FH Trading Group if you haven't already, and we're going to be posting a bunch of content. I mean, we'll post 2 to 3 you know, short form content, 30-second, 60-second videos at a time a day. Other than that, if you guys have anything, let me know.
Yeah, when you speaking on market conditions, because I was just thinking about this pretty much over yesterday. I'll be blatantly honest. Throughout this year, it's my first year of studying ICT, and I spent a couple of months on demo. I moved too quickly to try to pass funded accounts, and failed a lot during this year. And I was thinking that I don't know if it's even a good idea to try to go for those throughout the next couple of months, and even demo. Like, I don't even know, should I just sit back and just tape read and journal and do all that
Yeah,
stuff
I think
that
it's a
I don't want to do,
great question.
or actually do it in demo?
So what you'll find is a lot of funded accounts will start to do a lot of sales. Think about that. So there'll be a lot of funded accounts for companies, prop firms, that will do a lot of these different sales, whether it's Black Friday, Christmas, all this stuff. They are trying to get that in the hands of a lot of traders, right? They're going to reduce their prices so more people buy it, because they understand, or I would hope they would understand, that we are in the hardest time to trade right now. November, December, January is the hardest time to trade. And that's why, if you're a prop firm, why not give it in more people's hands, right? Reduce your prices, because you know more people will buy it, and you know more people will fail in November, December, and January. So I would say, yes, if you can, hold off on buying a funded account or trading a live account. I would really, you know, test that. And with regards to demo and tape reading, I think demoing is perfectly fine, because I think you demo with the expectation that you're not going to have the expectations you want. And I think that's going to show you, right? And so I think demo, tape reading, and journal should always be there. I think that this is a performance sport, and the farther you step away from it, the farther it'll take to get back into your groove. I think you should stay fluent with your study. I think journaling, tape reading, and still demoing, whether it's demoing outside of the training exercises or whatever the case is. Like I said earlier, the training exercises are going to be good not only for the information, but even if we see a drastic fall of people, you know, finding success and winning trades, that's great, because that's evidence that you should not be touching any of this stuff live. You should not be doing anything, in a live condition going into here. So, and even if you find something that works, maybe you find something through your demo trading and your journaling that it just works. Maybe you find a seek and destroy template that you like, or a certain news event. I mean, it's just the demoing is going to go hand in hand with kind of the tape reading. You have to understand that your demo is, to me, I utilize demo as a scratch piece of paper. Like, it's just a scratch piece of paper. Like, if I want to find something out about myself or what the market's doing in this type of condition, I open up a demo and I just figure it out. I try to I dial in. Okay, I want to figure this out. That means I got to trade this way at this time or whatever, and see how that works, right? And then I take that and I go through that. Does that make sense?
Yeah, for sure. I was just thinking, because I feel like I'm at a point right now where the technicals are not the problem. It's me when I lose. So maybe that's definitely a good idea to practice that on demo and practice that discipline through demo. So even if I lost, like, I don't really care, because I'm already not expecting much from the markets. It's just a matter of controlling myself when I lose.
Yeah.
Because when I win, obviously I'm fine. I'm great.
I
I
would
stop.
just say just open an account, and tell yourself you get one trade a week. You get one trade a week, no matter what. Just that's it. You got to hold yourself morally to it. One trade a week. And even if you did that every single week until like February or whatever the case is, you'll be so used to just, even though it's demo and it doesn't mean anything, your body, your mind, your subconscious attitude, undertone will just be so used to placing a trade and then stopping, right? And it'll be just so accustomed to that. And then, yes, you're going to have to fight a little bit of the butterflies and the jitterbugs of going live, but your body is so accustomed to, I traded, I stopped. I traded, I stopped. I traded, I stopped. I traded, I stopped. And I tell people all the time, if you have a problem with it, winning or losing, the best thing you can do is find someone close to you, mom, dad, brother, sister, whoever, best friend, and when you lose a trade or when you win a trade, just instinctively give it to them. Give them your phone, give them your iPad, give them your computer, whatever. Tell them, don't give me this. Don't let me have this for 24 hours, right? Or if it's your phone and you're like, well, I can't give someone my phone, delete the app for 24 hours, whatever you're trading on. Don't give yourself direct access to it for 24 hours. And what's funny, though, is all you have to do is beat the timer, which means if you win a trade or you lose a trade and you know that you're not good, if it's still in front of you and you're more likely to continue to trade, guess what you need to do? You need to delete, and indirectly you have like a 5-minute period after you take that trade, win or lose. Once you come out, win or lose, you have 5 minutes to basically say, okay, I need to get this directly away from me right now, and I cannot touch it, and I cannot think about it, and I don't need to be doing anything trading related right now. Because if you just let it sit, and you're like, no, I'm good, you might have a trading view alert go off, or you might check Twitter and you might see someone trading something, and then all you got to do is just go back up into that app called Trading View, and you'll start seeing stuff, right? And over time, you build this numbness to it, but it's just actually doing it. You actually have to do it. You, like, when you trade and you lose, you actually have to stop. That's the only way you're going to learn. That's the only way you're going to get better. Is you have to stop. You can't place another trade. That's the way you get better. That's the way you beat that. It's hard. It's easy to say, harder to do, but it's easy to do and it's easy not to do. It's just as easy not placing that trade. Technically easier. It takes less physical requirement out of you to place, and mental requirement out of you to not place that trade than it does to actually place the trade. But you do it. Why? I don't have that answer. You have that answer in your journals. You have that answer deep down as to why. And I'm telling you, it will stop when you stop. All good?
Oh, goody.
Alrighty. Well, 15 minutes early, but other than that, we'll get through it. We're gonna get it, right? I'm proud of all of you guys. I see the same faces now weekly. We get a couple new faces every single week. And it's have fun in it. Have fun. It'll be exciting to see where all of you guys go. I'm confident in all of you guys. And just know as time goes by, right? No one said it was going to be easy. It's going to get hard. It's going to be frustrating. Even the conversation we just had, the hardest things in the world for you to get this hurdled is not figuring out what a breaker block is or what time to trade or any of that. It's doing the hardest things that I have probably ever had to endure, and that is fighting yourself internally, just like Ismail was just talking about, right? Why is it that when I trade and I lose, I cannot stop? It is hard. It's because it's hard. It's because you want to be right, because you want to make money, and you know where you're probably going to get in life if you continue working hard, but you want it now. And it's not coming right now. And it takes time to just stop, right? I'll give you a book recommendation, right? I'm talking to you, Mr. I Am. Read this. Find this book. The Slight Edge. Jeff Olson. You could probably find it for free. I'll type it in the chat right now. Read that book. I guarantee you there's free PDFs. It's not an expensive book. You read that book and you listen to what Jeff says in that book about what is the slight edge, right? You read that book and you find the slight edge, you'll stop. You will stop taking trades when you lose, because it's bigger than that, right? This whole game that we play is bigger than just winning a trade on a day or coming up even on a day, right? That's what I think about when I lose a trade. The first thing that I think about is boys do what they want, men do what are required, right? Boys do what feels right, men do what are required. What is required of me is to not trade, right? Because it is big. Today's price action, the session that I'm trading right now, is so much viewed and minuscule to the whole paradigm of what I'm trying to complete as a human being, as a trader, that I am eating at myself and at my soul continuing to trade. Why am I going to let this one day in time, just this one cortisol kick of stress, this fight or flight, right? One little bodily emotion release when I lose a trade because I want to get it back and I have this fight or flight cortisol release in my brain. I just need to not trade, and everything else, I'm going in plan. I'm doing what I'm supposed to do. And it's so minuscule at the time, but it feels so much bigger. It feels so much bigger at the time being. When you're sitting there and you're placing a trade and you lose and you go and get back in, it feels like it's nothing. It's like instinct. It's like you blink and you're already back in another trade. If you cannot do that with the idea that that moment in time is just fractal to your entire journey, like I said, the windshield is way bigger than the rear view mirror, because what's in front of you is so much more important than what's behind you. And all those little losses and all those little revenge trades are behind you. Say that. Look yourself in the mirror. Say, they're behind me now. I'm not doing that dumb shit no more. All the little things, whether it's revenge trading or it's greed trading, there's someone on a whole nother spectrum of you that can, when they lose, they stop. But when they win, they can't stop. Right? There's a fine lining, right? It's stop. Just stop. Just stop. There's tomorrow. There's next week. Just stop. It's the best advice I could give you. Right? When you get good at that, and I fell victim to it this week too in my training exercise. I got in a trade, got out, got right back in, lost. But guess what I did after that? Even though I lost 1% of my account. Guess what I did the entirety of the week? I didn't trade. You don't think I wanted to trade on Friday's price action and make that back up so I could come here and show you guys that yes, we still delivered to buy side. Yes, it's still played, but I didn't because I was over exceeded of my risk threshold, right? I lost more than what I really was willing to lose. Even though 1% is not a lot, it's not make or break me. It's morals. It's my philosophy. It's the things that I stand on, right? I would have not been able to sleep as well throughout the nights knowing that I went back in that market, even if I did win. So, not what role model am I? What student am I? Like, how am I being a good brother or sister to you when if I'm doing the things that I won't put me to bed at rest? It's easy knowing that I have this guilty conscience following me. No, I'm going to trade, make my mistakes, lose my trade. I'm going to stop. Right? I'm just going to stop. That trade doesn't make or break you. That result, every result of your trade doesn't make or break you. Another thing is the idea of what do we expect as traders? What do we expect as traders when we go into a trade? What do you expect? You expect to win, right? What is the only thing that's certain in trading? Losing. So you're paired with a certainty of losing and a always false expectation of winning. That's what you're fighting right now, right? How do you fix that? Well, you realize that you just have to kind of let go of all of that, and your results are not a direct correlation reflection of you. You won that trade, you're not as good as you think you are. You lost that trade, you're not as bad as you think you are. Just keep going. One thing that helped me that I actually really liked that helped me earlier than later was that I never let results affect me as a trader. I won that trade, okay. I lost that trade, okay. Still gonna trade. Not gonna let my ego get too big or not gonna get down in the dumps too bad. Like, I just like trading. I love trading. And I know that wins and losses are just business, just transactions, just ticks in a market. Right? End of rant. End of rant. I'll let you guys go. Happy Saturday or happy Sunday, guys. Enjoy the rest of your Sunday. I will be talking to you guys obviously in the forum and in the social, but then also obviously Wednesday on our midweek reviews. I appreciate all of you guys. Keep working hard. Keep doing the things you know you're supposed to do. If you guys have any questions, comments, or concerns, reach out to us any way you can or want to. And I will talk to you guys soon. Trade safe.